Next is components of financial statement. Basically, there are 4 components. The first one is statement of financial position. Next is statement of profit or loss. Next is statement of changes in equity. And lastly, statement of cash flow. If we refer to the example financial report, Nestle Malaysia Berhad in 2019. So, example of the statement of financial position, as we can see that this is the non-current asset, current asset, the equity, non-current liability, and this is the current liability. So this is the information in the statement of financial position. Next is statement of profit or loss. As we can see that it starts from the revenue until we get the profit for the year. So basically in the statement of profit or loss, revenue minus with all the expenses, then we get the profit. Statement of changes in equity. So this statement is actually a movement in reserve comprising the shareholders' equity. As we can see that it's from 1st January until 2018 and then January 2019 until December 2019. So this is the movement of the reserve for 2 years. Statement of cash flow. Statement of cash flow is the summarize of cash movement in the business. So as we can see that it's from operating activities, changes in working capital, and so on. So this is the information you can get from the statement of cash flow. Okay, now we look into the detail statement, financial statement. First is we have statement of financial position. We start with asset, and under asset we have non-current asset and current asset. Next is owner equity. We have capital. We have net profit or loss. And finally, drawing. Next is liability. First is non-current liability, under liability, and current liability. So this is all the information that we get from the statement of financial position. Okay, next is statement of profit or loss. We have revenue and expenses. Basically, revenue minus with the expenses, then we get the profit or loss. Next is statement of changes in equity. And finally, statement of cash flow. How do we get the profit? If revenue is more than expenses, then we get the net profit. If revenue is less than expenses, then we get net loss. Now we look into the definition of items under statement of financial position, or also known as balance sheet. We have asset. What is non-current assets? Assets acquired or bought, not for resale. Use them in running the business. It has a useful life of more than 1 year. Example, we have tangible and intangible asset. Tangible asset is land and building, motor vehicle, machinery. Intangible asset, example is goodwill, patent, investment, which is fixed deposit more than 1 year. Because non-current asset, the useful life must be more than 1 year. If the fixed deposit is less than 1 year, it becomes current asset. So this is the item or example under non-current asset. And for current asset is asset that constantly changing their form during an accounting period. Example, we have stock or inventory, debtors or account receivable, cash at bank, cash in hand, prepaid expenses, accrued revenue. So this item under current asset. Next is owner equity. Owner equity is a financial obligation of the business to the owner. Capital either in the form of cash or other asset that owner brought into the business. Profit is the excess of the revenue over expenses. Losses is the excess of expenses over revenue. Drawing is an asset of a business taken by its owner for his personal use. So capital plus profit or minus loss and minus drawings, then we get the owner's equity. Okay, next is liability. Liability means that financial obligation of the business. Under liability, we have non-current liabilities and current liability. Non-current liability is amount owing by the business that is not expected to be repaid within 1 year. Example, long-term loan, mortgage on premises, and also debenture. Current liability, amount owing by the business that is expected to be repaid within 1 year. Example, short-term loan, bank overdraft, creditors, account payable, accrued expenses, unearned revenue. Now we look item under statement of profit or loss or income statement. We have revenue and also expenses. Revenue represents the gross increase in owner's equity resulting from business activities entered into for the purpose of earning income. Trading business derive their main revenue from sales of goods. For example, main revenue for a computer shop is the sale of computer. Services business main revenue derived from performance of services. For example, main revenue for a law firm is a legal fee. Other revenues such as rental income, interest received, commission income, dividend received, and etc. While expenses are the cost of asset consumed or services used in the process of earning revenue. A business must incur expenses items which are necessary for the continuing of the business, but for which no long-term benefit will be obtained. For example, purchase of goods, salary, interest expense, rent expense, and etc. Now we look into example in the bookstore. First is non-current asset. As we can see from the picture, they have bookshelf, chair, table, cash register. So this is all the non-current asset. Okay, current asset, we have closing inventory. Definitely, the bookstore must have books and stationery for the closing inventory. Cash in hand, cash at bank. Capital or owner equity, basically the startup cash by owner. So owner bring the cash into the business, so it's considered as owner's equity. For non-current liability, for example, long-term loan, the business might not have enough cash, so apply for long-term loan. Current liability is account payable, definitely from the suppliers of book and stationery. Revenue generate from the sales of book or stationery. And expenses, we have utility bills, which is electricity, water, rental of shop, the space at the bookstore, and also the cashier or worker salary. So this is the possible expenses in the bookstore. If you look into the bakery shop, basically the almost similar, except that the revenue derived from the sale of the bakery, which is bread, example cake, coffee, and the current asset closing inventory, the ingredients, flour or butter, and so on. So this is under current asset, and the rest is almost similar to bookstore.